Hey there, Chris Marcus here with you again today on Wednesday, July 12th. And today, a quick video about some comments out of Fed Chairwoman Janet Yellen this morning. I woke up and got I believe it was a Wall Street Journal headline implying that there is news out of the Fed. Janet Yellen was speaking in front of Congress today, and the message that was implied was that her comments were that the Fed was perhaps going to go slower than expected in raising interest rates. And it was interesting because I actually read through some of her comments, and kind of like a lot of the things that come out of the Fed or some of the Wall Street outlets. I don't know. I read what she said, and it was kind of really hard to take anything from it, which is often the case with the Fed. And call me a little bit of a skeptic, although after 15 years of following the Fed and seeing what they say and do and how they change their mind, I think it could be often wise to take anything they say with a grain of salt. Hey, maybe Janet Yellen raises interest rates another quarter of a point or not for the rest of the year. In the end, does it really matter? Because let's take a step back and think about it from a bigger picture where housing market collapses in 2008, Fed comes along, lower interest rates to 0%, buy about $4 billion worth of assets. Again, how do they do that? Printed money. With the thinking that, all right, the economy's weak, it's going to be temporary, a little support just to spur things going and get it rolling again. Yet, keep in mind, here we are 8 years later. So if all of the printed cheap money really worked and had saved the economy, and it was just temporary, I mean, 8 years doesn't seem quite so temporary. And of course, every time it comes to actually taking significant action to undo any of that, then there's usually, well, maybe the economy's not as strong as we thought, or we're going to raise interest rates unless the next week's job report comes in lower than expected. So notice the language that's often used, that we're going to respond, but it's dependent on the data, which, well, if you actually think about based on where we were, what's happened, what the data would likely to be, well, it's not a surprise that we're not that much stronger because, of course, printing money to solve a crisis caused by printed money is as illogical as it sounds. And again, I like to think I'm a little bit proud that I've gotten away from blaming or saying this guy did this or right or wrong. So that's not the point, really, to be critical of anyone. I like to just think of myself and what actions I can take and not cast blame, although just from the standpoint of, do I believe that the Federal Reserve is really a legitimate institution trying to make sure the economy is all right, doing everything for the benefit of the people? Personally, I gave up on that one a long time ago. I think it's a massive Ponzi scheme. But in the end, whatever you think of their intentions, you can still just look at the simple actions. We're 8 years later. It hasn't worked. There are simple reasons it hasn't worked. And personally, my guess is that someone within the Fed would have to know that if they actually raised interest rates or undid the balance sheet, then that would pretty quickly collapse this Ponzi scheme that we've watched build up. It's going to happen one day or another, sooner or later. Again, part of the reason why I focus so much on the silver market is that while there could be a variety of sparks that trigger an event similar to 2008, certainly if we get to that last bar of silver and it's realized that there's been a lot of manipulation going on here, I think a lot of the chain effects that would happen from that would overwhelm anything that Janet Yellen or the Fed or Goldman Sachs or JP Morgan says they're going to do. Because that's the thing about markets. You can distort them, you can put all sorts of government policy, you can make laws and try and change things. Yet, fortunately, what I've always found so beautiful about markets is that there is a sense to which there's a natural, there's a sense of nature to it where you can try and get in the way of things, but you can't tell the dog that he doesn't like steak. There's certain things you can't change the preferences of people. You can try and do that, but in the end, you build up a Ponzi scheme, it's going to fall. So perhaps a 5-minute video to say anytime you hear something coming out of the Fed, A, I wouldn't take it too seriously. B, hopefully today we introduce some of the things that you understand why or I'm sure you hear a lot of other people don't have too much faith in this system and what's going on because, we've seen it before. It's amazing if you look at the policies that are in place, the stories you read about the housing market now. Some other headline today where bankers are now going after riskier mortgages because they want more yield. I mean, it's the same thing we went through before. And I think it's unfortunate that you have markets set up in this constant bubble pattern and not given good information because it leads to a similar outcome, although that doesn't mean that you have to go through the same outcome. And that's why we're here today. So hope this helped. Leave your comments below. I do answer them, and we've been getting a lot of good questions. So, and just follow your own intuition. You're getting this stuff right. And when it seems like things are a little fishy out there, you're not imagining it. So with that said, leave the comments, and we'll see you again tomorrow. Thanks.